Let's dig into the fallout from some of the big commodity moves we're seeing over the last few weeks. Leslie Picker joins us now with a look into that space. Leslie.
Hey, good morning, Steve. Yeah, we're starting to see the effects of the voracious moves in certain commodities, especially last week. Peabody Coal had to raise a new credit facility from Goldman Sachs with a whopping 10% interest, thanks to a $500 million margin call. Peabody had a hedge contract at the average price of $84 per metric ton, but high demand for coal was only exacerbated by the Russia-Ukraine conflict, causing relevant coal prices to surge 250% between the end of 2021 and March of this year. And the price of nickel, of course, surging before it was halted, causing Chinese nickel producer Tsingshan to face paper losses reportedly in the billions of dollars. A source close to the matter told me that JP Morgan and several other banks are working on terms to extend a line of credit to Tsingshan to help it post collateral and meet margin. Bloomberg had reported last week that JP Morgan was the biggest counterparty to Tsingshan's nickel trades. At the moment, these appear to be unlevered, isolated incidents. This is very important. However, there are possibly other pain points out there that haven't yet risen to the surface, and that's what many participants on Wall Street are very focused on right now. Matt Maley of Miller Tabak said in his weekend note that he's focused on what he calls the hedge provider, specifically bank stocks like JP Morgan that could be impacted due to counterparty risk, although they are trading higher today. He's also watching the KBE Bank ETF. Guys.
Leslie, is there any sense that anybody has a big number, any place that we don't know about at this point that's we're gonna come in on tomorrow morning and say, oh, so-and-so bet such and such on this Russian bet?
There are certainly rumors out there, none that I wish to discuss publicly because I don't want to be moving the markets when nothing is certain at this point in time. But there's a lot of discussion behind the scenes, a lot of debate, because, as you know, Steve, the interconnectivity of the banking system is what makes this so critical. If you have these idiosyncratic incidents, yes, it's a pain point. Yes, these are big numbers that could, create some pretty big losses for those individual companies. The challenge arises is when there are a multitude of those situations that impact the banking system and create some massive losses. Archegos, if you recall, a year ago was more of an isolated incident. A lot of banks took multi-billion-dollar losses as a result of that, but it kind of ended there. What you don't want to see is multiple Archegoses at the same time.
Shepard Smith here. Thanks for watching CNBC on YouTube.